Welcome everyone to Vested Interest. This is Shane back for a Stock Pick of the Day video. It is Wednesday, January 8th. We're going to take a look at one out of the consumer staple sector. This is Bunge. Before we get too far in the video, hit that thumbs up button down below if you find any value in the content. Make sure you're subscribed to the channel. Join us on this journey to financial freedom. Join the Vested Interest community. Click the notification bell so you're notified whenever we put out any new content. I put out a Stock Pick of the Day video Monday through Thursday whenever the market is open. We take a look at a company's stock that is pulled back on the day to see if it is presenting any value. Today will be Bunge Global, again out of the consumer staple sector. And for those of you who are able, there's the thanks button down below. If you want to donate to the channel, buy me a cup of coffee, go and click on that. There's several tiers. Really appreciate everyone who's able to do that and understand those who are not. And a special thank you to the subscribers out there. You guys are awesome. The channel continues to grow because of people like you. Now, this is the vested interest stock screener. This is the criteria we will be looking at today in the video. It must meet 5 of 8 to make it onto my watch list. And just because it makes it onto my watch list, 5 of 8, 6 of 8, 7 to 8, or even 8 of 8 does not necessarily mean that I am buying. It means I am interested in doing more of a deep dive into the financials of the company, and only after I've done a deep dive into the financials, looking at stuff like, are their margins growing, their PEG ratios, price to book ratios, is their revenue growing? Are they paying down debt? Do they have more assets over liabilities? That maybe compare them to other companies in the same sector, do a discounted cash flow analysis on the company, and only after that, and then it hits a price I'm willing to pay, do I add it to my portfolio. For the most part, I'm not really looking to add a lot right now. I'm adding to existing positions, but every now and again we do add a new one, and this is how I go about it. It is also a back check on the stocks already in the portfolio just to see if they are still meeting the original scanner, or if I should do more of a deep dive into the financials and maybe they're having some trouble. Now back to Bunge Global. Check them out at their homepage, bunge.com, ticker bunge.com. That is their homepage where I pulled this information from. That's bunge.com. That is their homepage. We are Bunge. We connect farmers to consumers to deliver essential and sustainable food, feed, and fuel to the world. With more than 2 centuries of experience, unmatched global scale, and deeply rooted relationships everywhere we operate, partnership and collaboration are the core of our business and spirit. We celebrate the connections we make as we look forward to opportunities to drive innovation, delight our customers, create an inclusive and a safe environment for our employees, develop life-changing solutions for food, feed, and fuel, fostering a better and more sustainable system for everyone. We are the world's leader in oilseed processing and leading producer and supplier of specialty plant-based oils, fats, and protein. Our products are used in a wide range of applications such as animal feed, cooking oils and flours, as well as bakery and confectionery, dairy fat alternatives, plant-based meat, and infant nutrition. Bunge also has an important role to play in using our crop infrastructure to help fuel renewable energy solutions. Our global network of facilities spans 6 continents and includes grain elevators, oilseed processing plants, and strategically located port terminals. From farm to consumer, we provide transparency across fully integrated end-to-end value chains. So again, they're in the food industry, a lot of different stuff they use out of the food industry, dairy alternatives, plant-based meats, that seems to be a new popular one. Oils and flours, probably cooking oils would be one that you're most familiar with, might be in some of your animal feed if you're a farmer out there, infant nutrition. So they're in a lot of different sectors out there with their products, but primarily, in the farming and around the farming industry is what they're looking at. Now, the reason we are taking a look at them down 0.55% on the day, we are talking about Bunge Global, ticker BG, out of the consumer staple sector, closed out the day at $77.38. 52-week range as low as $75.78, as high as $114.92. They are pretty close to their 52-week low here. Not quite right up against it, but pretty doggone close. Market cap of $10.804 billion, a beta of 0.65, so they are less volatile than the overall market. PE, price earnings ratio, is $9.81 per share. EPS pretty close to that at $7.89 per share. Earnings date coming up in February 5th through February 10th, sometime in that window. Go ahead and check out their webpage if you're interested in their earnings report. And forward dividend is $2.72 paid on the year. They are a quarterly payer, I believe, so divide by 4, though we will see that here in a little bit what their quarterly payout is per share. And their yield starting at 3.5% is pretty nice. Ex-dividend date February 18th. Looks like they're going to pay out on March 4th. 1-year target estimate, at least according to Yahoo Finance, where I pulled this information from, $104.23. So they see some upside in price appreciation as far as according to Yahoo Finance from where it currently sits. Jumping over to the right, I like to look at dividend yield theory to see if the company is presenting any undervaluation. To do that, we look at their 5-year dividend yield average, right here, 2.83%. Compare it to their current 3.5, or over here where it says forward 3.5%, same number. Since it is higher, their current is higher than their 5-year average, that speaks to undervaluation. These numbers are inversely correlated. Since it's higher, that speaks to undervaluation. If it was lower than the 5-year average, that would speak to overvaluation. So right now, according to dividend yield theory, this one is potentially undervalued. Nice undervalued too if you look at that margin right there. Payout ratio is low. I like under 75%. They're sitting at 34.03%. So under the 75% I'm looking for there. We're going to drop down and look at free cash flow. I like growing free cash flow over time. Typically, if a company has growing free cash flow, they can pay down debt, make acquisitions, reinvest back into the company, buy back shares, or raise dividends. Pay and raise dividends is what I like to see, especially those raises over time. Going back to December 2021 here, you can see negative 3.2 billion in free cash flow. We don't like that. 2022 in December was negative 6 billion, so even worse in 2022. A couple bad years, but they may have had some write-downs or something on that. You'd have to go in and look at their books and see what's going on, but that does not look great there. 2023 looks like they're back in the positive, 2.18 billion, but then trailing 12 months, that would include all of 2024 at this point, 1 billion there, so down again. So they are kind of up and down all over the place, but they are repurchasing capital shares. I was surprised to see that they did so back in 2021. If you're in the negative, I don't think you should be repurchasing shares. But again, they may have had a lot of cash on hand, maybe cash in the bank. Who knows? But they bought back 100 million shares. 2022, 200 million shares, same thing. I wouldn't be doing that when you're negative. But if you got cash in the bank, maybe that's where they're pulling it from. 2023, 600 million shares out of the market, and trailing 12 months, 734 million. And even though they increased the repurchase of shares, I don't believe that accounts for over $1 billion less in free cash flow. So again, up and down on the free cash flow. They wouldn't get a check there from me. Jumping over to stockanalysis.com, I am not affiliated with Yahoo Finance or stockanalysis.com, just two sources I go to for information, and I do recommend more than one source so you can make sure the information you are getting is accurate and up to date. And as I say up to date, I look down here and see that this price target was last updated August 1st, right? So this is several months old now. And that's why I say look at more than one source. Some of these sources, right, they're a little behind when it comes to updating this. Now, they do have 7 analysts that did take a look at it back in August 2024. They called it a consensus buy back then with a low estimate of $105. It's pretty close to what we saw with Yahoo Finance on the previous page. It's well below that now. So if it came back up, that would represent a 35.69% increase from where it currently sits. Average estimate of $118, that would represent a 52.49% increase from where it currently sits. And a high estimate of $138 would represent a 78.34% increase. All the while, you could collect that 3.5% dividend yield if you were to buy them now. Jumping into statistics, I like to look at return on equity and return on invested capital to see how well the company is reinvesting its capital back into the company. I like 10% or better for both of these metrics. Return on equity is sitting at 10.92% ROE, return on equity. So that beats the 10% I'm looking for there. But return on invested capital is a little low at 7.09%. So that is under the 10% I'm looking for. And you've got to get both to get the check. So they wouldn't get a check for that one. EPS growth is forecasted. It's not over the next 5 years. I typically like 5% or better. Nothing forecasted for EPS or revenue growth. So a little disappointing there that they don't have anything. Jumping over to dividend history here, quarterly payer, 34.16% payout. Again, very low payout ratio. Dividend growth is 4.06, so they are growing the dividend low single digits there, so not bad dividend growth. Beats inflation most years. Growth years only 4. Buyback yield is positive. You want that to look positive at 4.85%. That tells me that they are buying back shares at an opportune time whenever they're cheaper than, what they should be, I guess. Shareholder yield at 8.4%, same thing. I like to see this positive as well. They do pay out on that March, June, September, December timeframe like most companies do. Going back in time in their dividend history here, August 2022, 62 cents and some fractions of a penny. Raised it up August 2023 up to 66 cents and some fractions of a penny. Looks like the most recent raise was May of 2024 up to 68 cents. So it looks like somewhere in that May-August raise, maybe in 2025, if they're going to continue this growth, is what you should be expecting. But for right now, 68 cents per share quarterly. All right, let's get back to the screener here. Understand the business. That's where we started. Check there, right there in the farming industry. They provide a lot of material for stuff like fuels, food, uh, animal food, infant food. So they're really in the farming industry and providing those products for use elsewhere. Growing free cash flow. Nope. We had several down years, and it looked like maybe one up year and then down again in 2024. Growing dividend. They are growing the dividend over time. Dividend payout ratio is under 75%. It's around 34, 35%, 32%, somewhere in there. Check valuation based on dividend yield theory. Dividend yield theory does say they're potentially undervalued, and it is within 15% of a 52-week low. So we're looking at 1, 2, 3, 4, 5. It just sneaks onto my watch list. ROIC and ROE were ROIC was under 10%, ROE was over, and earnings per share growth wasn't listed, so nothing there. So 5 of 8. I'm going to slide this one onto my watch list. I'm not super interested in this one, but I wouldn't mind doing a little deeper dive in the company. It is one that I saw one of the viewers of the channel, subscribers of the channel, I think, had recommended, or not necessarily recommended, but he said it was one that he was buying or she was buying. So appreciate that in the comment section. And again, I do pull out of the comment section companies like this. So if you have a company that you're buying and you'd like me to take a look at, go ahead and drop it in the comment section down below, and I'll try to work it into one of these stock pick of the day videos whenever it pulls back. Well, that is really it for this one. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this channel. Join the vested interest community. I do personally read and respond to the comments, so drop a comment down below. Let me know what you think of Bunge Global. Is it in your portfolio? Is it one you're watching? And again, thank you to the person who noted that this is one that they were focused on buying recently. And that is it. This is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you have a great week, and we will see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I am only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can lose money. You should never invest any amount you're not comfortable losing. Always do your own research and invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor.